Hello guys, glad to have you on board again. Today we're going for the Experience podcast. So once again, no beginners in here. If you're still having a look at those podcasts with unexperienced levels, you're heading towards some problems. I know you might have some dangerous level of curiosity or whatever that is, but if you really think that feeding yourself with high level content will make you better, then that might happen into some other sectors or things like that, but when it comes down to trading, you're just going to put yourself heavy weights on the shoulders, probably just going to break those shoulders rather than doing anything positive in here. All right, anyway, let's assume you're smart enough not to look at this if you shouldn't do it. I'll go straight to some experience content in there, so I'll not explain all the framework stuff, whatever, the context analysis. I assume you guys already know about all of the major context we're dealing with. So today's topic is going to be about helping you mapping the multiple time frame analysis on your brain, just to make sure that normally this is something you already know, but just make sure that first of all I remind it to you, or if you ever haven't been doing this so far, you really need to do this, especially when you're dealing with complex stuff to trade. Exactly, we're going to take the good old SPX because that's the biggest mess we could deal with right now. So in terms of educational content, it's not that I want to trade just about SPX. And to be honest, if you have a look at my current portfolio exposition, yes, indices are one of the big topics, but they're definitely not where I've got all my money being exposed. I do have more than way more exposition to forex market right now. So the thing is, I'm talking about it because this is where we've got the most to learn. This is the most interesting topic at the moment, simply because a lot of complex stuff happens with the indices, and this is where, at least for experienced traders, the most reliable information, educational content can be spread out. So let's do this thing right here and now. So what we're going to use is the anchor text. Let's assume this. We're going to take out. We're going to start off with. Normally, we're supposed to take the context analysis. All right. So in here, we contextualize. So we need weekly charts. All right. All right. This is where we've got context. So we're monthly fucking charts. All right. So you know that anything that happens right now is monthly impacted. All right. Normally, you know about that. All right. So let's make a global. Sorry, I'm going to leave that trend line anyway. I'm going to need this one. Just make sure this is not visible into higher time frames. I'm going to keep it hours. All right, so that's what it is. Or we can actually, no, I can't delete it. So let's make that job. All right, so we're monthly chart. This is our global context. What is the current context in here? All right, let's just have a look at this. All right. Sorry, I shouldn't be using Bollinger Bands. That's some things we're going to use afterwards in the shorter time frames. But in the meantime, channels. All right, so here's what we have. All right, we're bullish trend channel. All right, from what we can see out of a monthly charts, oscillators showing some divergences in here. So just have a look at the framework oscillator. I'd like you to I don't know if you can assess the contrast grays in here, but this is the thick line I'm caring about, the one in the background, right? So from what you can see in here, we've been breaking up a bullish cycle, but we're returned to bearish reversal area, so we're very likely going to go oversold territory, all right, and making a bearish oscillation. That's all we care about, right? Like, this is what the most likely thing is going to happen. Regarding the technical signal, this is where we've trended, all right? Remember, lots of overbought cluster. This is where we should have reversed, and the market doesn't. So this is where we trend. So we're currently trending in here, all right? So anyway, if you think we're going to go down these prices, you're very likely crazy. What we can do instead is retracing to 23%, 30%, that's all we can get, all right? So remember that anyway and anyhow, we've already been testing the 23%, so if we go lower, the next step is probably 38%, eventually 50% if really we have the shit hitting the fan. But don't go targeting anywhere below those prices right now. This is where my target number 2 is. So the monthly range right now is probably the divergent state of a trend. All right, I need you guys to really understand that we're reaching our divergent state, and normally right here, right now, we'll return to previous supportive area. So in here is divergent. Sorry. So reaching out this area, we're pretty much overextended. We're very likely going to have to go oversold territory without making any new lows. All right, so you really need to understand that. I'm sorry, I'm going to have an appointment, so I'm going to have to make this one real quick. So monthly is divergent. All right, now let's go weekly. Damn it, I'm going to have to go real fast. I got like 10 minutes available. So this is weekly chart right now. Alright, I'm going real fast. What is this context? You really need to figure this one out real quick. Alright, you can see trending, pullback, final excesses. So we are end of trending here. We're nearly reversal. Alright, so reversal, but as we can see, we're just divergent. So if we pull back, there is going to be supportive area real quick as we're still trending in the monthly charts. Alright, but we're overextended in the current move. We're very likely going to stop there. So there is no more bullish gains to make in the monthly chart. That's exactly what I'm trying to profit from right now. We're overextended monthly. We have to pull back, and monthly pullback generally causes 30% retracement. This is not the end of the world, just 30 fucking % retracement. All right, let's go daily. Damn it. I'm sorry, I'm really going real fast in here. So now let's go daily chart. What is that context? All right. We don't know. It's neutral. It's a range. Mature range plus potential accumulation. All right. So we're trying to bullish accumulate. Right, the range is it's not necessarily mature, as we've been making new highs in here, but as you can see, we're not trending, so we're trying to terminate a bullish move. As we can see right now, we're oscillating context the trend channel, so we're trying to bullish accumulate. All right, now let's go full hour. All right, you need to always have that grid bared in mind. That's something I have for a long time right now. All right, and I update this thing as we go. So in here, we've got a mature range, all right? We've got a market top in here. Damn it. We've got our market top in here. All right, we've made lower high in here, and we're oscillating from context to context. So in here is first range boundary, second, third, fourth. All right, so in here is, sorry, so daily is range plus potential accumulation. Or actually, it's just a range, I would say. Yeah, it's a range. We're first range boundary, and we're going from context to context right now. No, daily, we don't know yet. All right, it's a possible range, but we don't know yet. All right, this daily is the most unpredictable stuff. Remember that if we go daily, we don't know what the hell that is. The last time we tried it when we broke a support, and in here it's neutral. Though I have the answer, but technically speaking, we cannot yet confirm this thing. Remember, to me, we're doing this extended range structure. So I would say range, extended range, or call that volatile range. All right. Volatile range. So now full hour. I need to go real quick, I'm sorry. So like I said, full hour, neutral range plus potential accumulation is what we have in here, all right? As you can see, full hour right now, we're doing context to turn channel to context on a mature range, which is important. We can't do that on a daily because the range is not mature. At least, I think the range is mature because it's just a stupid range in which we're making extended waves, all right? So I think the range is mature. We're reaching out the final wave, so we could say mature range in here, but let's call that a volatile range because we still don't know. All right, so this is full hour. We're nearly searching for a bearish accumulation out of a mature range. Like I said, we're looking for accumulations. For now, we're trying to bearish accumulate. That doesn't mean we'll succeed, because if we ever go down to the resistant context again, then that simply says the bearish accumulation failed. All right, so we're looking forward for this. Now, 1 hour chart time frame. All right, what does that look like? All right, normally you should figure this one out real quick. All right, so I'm not going to go into details. You've got this, you've got a lot of these. All right, we're clearly bearish range trading. All right, so in here is a bearish range trading. All right, so that's H1 time frame. And anything below this, all right, is absolutely fucking mess. All right, as you can see, it's just pure noise. We've got bearish trend in here showing absolute reversal. So it's noise. Anything below is just volatile noise. All right. So remember that. How do you deal with that? Oh, damn it. I need to. 15 minutes. All right. So in some ways, why is this the most difficult things to deal with right now? Simply because everything is unaccording. So in here, we have bearish pressures on the monthly charts, the one I'm trying to deal with. All right, we've got reversal signals on the weekly chart suggesting that, yes, this is very likely having bearish pressures as well. We've got a volatile range in which we're neutral, but we're currently neutral bullish because we're in a bullish stance. So we're looking for the bullish resistance of this range. All right. In here, we've got a potential accumulation. So that would be neutral, but bearish tainted. All right. Like we're trying to go bearish on this range. This one is pretty much bearish orientated. And the 15-minute is just sideways. It's just pure fucking noise. So how do you deal with that? I personally think that as long as the volatile range hasn't found its boundary, the risks are limited to the downside because these guys are trying to push up. But the problem is they face heavy resistance in here, and we fail to find some support right now. The only thing that supports us right now is this short-term burst of volatility. Simply means that anytime we try to go bearish, volatility boundaries are limiting us. But we're getting to that volatility a little bit more each and every time. So we're getting more volatile, and more volatility means sooner or later we'll start fucking up the supports, and we'll start fucking up the daily supports, which will trigger the daily range to find its actual market top. For now, we just can't do it. All right, so if you want to sum up Wall Street's behavior, it's all about whatever comes out with the daily. As long as the daily remains on top of the previous market tops, market bottoms, hesitation sustains on the fact that we might have found a market top, a major top in here, the top of the overall big range. Right? In order to validate this top, we need to break a support. That's the reason why the 15-minute volatile, the only time frames, H1, 15 minutes, in which Wall Street can, not Wall Street, the White House can impact because they propaganda out of the deal, whatever. They just, yeah, this is pure propaganda. They're doing everything they can to save the dips. So they saved this dip, they saved this one, hopefully higher than the previous one. They're trying to save this one. I'm just barely hoping that sooner or later they're going to fail. And as they fail, we'll be able to confirm the market top. Until then, speculative trading. Now, I think you now understand what my current stance is in the markets. I don't know because for now I'm speculating on this major market top, but I still can't figure it out. As long as we don't break a supportive area, and we failed every attempt so far, as long as we fail, I can't confirm. The day I confirm, you'll be sure I'll be reinforcing my positions. For now, I just can't. My latest trade is the one I've been taking in here in the 1 hour chart. All right, I was trading this bearish range. We're now trying to fuck it up. So now H1 time frame is no longer bearish range, it's bullish range. All right, we're breaking resistances. That's what we were figuring out. Right, the major time frame is a bearish range, meaning that we're very likely going to find some strong resistance in there. But for now, what we do is this. All right, we're bullish ranging out of a mature bearish range on the H4 time frame, right, in which we're very likely going to go maintaining that market top. I think that's a continuation range. We were hesitating the other day if we will get a triangle formation or the classical ABC. Now we've got the answer, right? We're doing ABC, we're breaking that resistance. So I'm looking for resisting trades in this area out of Fibonacci clusters of the overall trending market. So what I'm trading right now is exactly this. All right, I'm putting my fibs of the market top to the market bottom. And I'm looking forward for a selling entry, at least 61. Now it's done. and I'm looking for approximately 76% retracement, eventually the range structure, right? Like it would be classical range. Sorry, not this one, reversed. Right, so I'm looking at this area right now. This is where I think the next trade is going to be interesting. All right, so we've got 15-minute volatile thing, eventually H1 time frame volatile stuff as well right now. As we're hesitating in here, the major move remains bearish for the moment, but they're trying to save the dip in the daily chart, just like they tried the last time as well. But the last time we failed to make historical highs. This is the most important element at the moment. Last attempt failed. Now I've got something else I would like to show you, all right? So this is CFD volume, so it's not exactly the same when it comes to, damn it, to the real traded volume on the SPX, but there is something real significant. There is a very low volume over the course of the latest days in the SPX. So a lot of people tend to believe that we saved the dip. I mean, look at how it's been behaving the last time we saved the dip. Quite significant amount of volume, like the bears being reversed. Yes, that's fine. All right. Now this time we failed historical highs after trapping some bears, and now we've got very low volume on the supports. Many reasons leading me to believe that this is just a dead cat bounce structure. Just like we go there, and the best we can hope is staying in there for a long time. For the bulls, for the bears, the best we can hope is finding a strong resistance in here and finally fucking a daily support. That would put an end to the potential daily accumulation, because remember that right now we're dealing with a mature range structure, which is an expanded range structure, but it's mature, all right? And we're trying to accumulate. As we can see, we're dealing between trend channels and context channel, which is dangerous because that could lead to a bullish outcome. I don't think that's the most probable, but it's not something I need to avoid, all right? That's a risk for me. That's the risk I'll be proven wrong. So I don't want that to happen. In order to avoid this risk and to flush it out, I want to fuck out this area and go to the trend channel, to the context channel, all right, which is my first target area. And out of this, we'll have to deal with if the weekly reversal confirms, which means we keep on going, or doesn't confirm. And if it doesn't confirm, we'll restore bullishness. So you know this area is really, really important for me, because this is where the weekly scenarios will actually validate or not. That will probably validate the monthly as well. If I'm wrong, in here we can reverse bullish, and I'll change my mind on the overall global scenario. All right? Reason why I tend to believe this area is where things really matter. We can spend time out there. I don't nearly give a shit. We're spending weekly and monthly resistance in here, so it takes a long time before these guys actually manage to break up. And I don't think they've got anything close to this. So, that's it for today. So I'm sorry, I'm gonna have to pass on by. I'll eventually release you more content next week, because there are stuff I've been telling to the French guys that I would like to share with you, but I won't have the time. So I'm sorry for that. Or eventually I'll make another show later today. I can't promise I can say anymore. All right, bye guys, and if I can't make it, I'll see you guys next week. I'm sorry.